Hey everyone, welcome back to POA for you. My name is Leroy, and today I'm going to deep dive into the topic of journal entries, or also known as double entries. If you guys have not already caught the video on POA fundamentals, the big picture, and it's in my POA fundamentals playlist, do catch it because that one will give you a holistic big picture of the different terms that you're listening to or that you hear. But this video itself is really a deep dive on journal entries or double entries only. All right, so without further ado, let's get right into it. Now, what is journal entries or double entries? Um, it looks like this. It's debit to one account and credit to another account, and the debit and credits will be of the same amount. There is sometimes if the examination questions ask you to specifically write down the journal entries, then they would ask for a narration of the journal entries, and journal entries will always come from a transaction or an activity that the business does. Okay, so this is the structure of the journal entry. A very simple debit, credit, amounts are always the same, and then a narration. Now I'm going to give you an example. So for example, the activity or the transaction is the business paid salaries and wages of $10,000 via check. So what is the double entry or journal entry? In this case, we always ask ourselves what is happening and how it's happening. All right, so what's happening is wages and salaries were paid and paid via check. And then in my mind, I would come out with debit wages and salaries, credit cash at bank. Because wages and salaries is an expense, it's debit nature. So if I have additional wages and salaries to account for, then I want wages and salaries expense to go up to account for this amount that I've paid. So I'm going to debit it since it's debit in nature. Cash at bank is debit in nature as well because it's an asset. And if I've paid I've paid wages and salaries by check, then my cash at bank balance would actually go down. So to reflect a downward movement in cash at bank balance, then I'll credit it since it's a debit nature item. The narration would simply be words picked out from the transactions, right? It's not rocket science, just copy and paste keywords. So it's really what is happening. So you paid wages and salaries, and how? By check, right? That's the simple narration of it. What's happening and how. Now, if you are confused, then you would need this table. You would need to memorize this table before you can even approach journal entries effectively. All right, so there are a few tables that I'll show you now. Oh, before I do that, actually, I've got one last thing. Now, where do journal entries go, right? After you debit this, you credit this, then it goes into individual ledgers. So the wages and salaries ledger, the cash at bank ledger, and all the different ledgers would then move into the trial balance, and all the balances in the trial balance would then move into the statement of financial performance or position. Now, this was covered extensively in my POA fundamentals, the big picture video. So go watch that. All right, so moving forward, this was the table that I think it's super important. You need to know what are debit nature items, what are credit nature items. And for example, let's zoom down into debit nature. Debit nature items are asset and expenses, these two categories of stuff. What's an asset? The next slide, I'll show you a list of assets, but assets are basically things that you own. So it would be cash at bank, for example, because that's something that the business owns, right? And it's things like motor vehicles are things that the business owns because they have title to it. They've bought it and it's theirs. Things like inventory is things that the business own because they bought it and they're sitting in their warehouse. Things like trade receivables, these are things that business own as well. So that list will come out quite soon. Expenses are a little different than assets, right? Because they are things that the business has spent in order to help generate revenues. So if you think about it, if you are a bookstore owner and you rent a bookstore, right? That is paid on a monthly basis, and after that month of paying, let's say if you pay the rent for January, it helps you generate your income for January because customers will walk into the store and buy books, and it helps you generate that income. But after January and February, that rent that you paid in January just disappears, right? It's gone. It's out of the window, right? You can't get it back anymore. It's defined as an expense that helped you generate the income for the month of January. Okay, so typically expenses would be rent, wages and salaries, general expenses, utilities, these kind of stuff. Now, you just have to remember for all these kind of things to record an increase. If you have paid for rent, then you would debit rent, right? If to record a decrease, if you want to, if you receive money, let's say from your trade receivables, your customers, then you need to record a decrease in trade receivables, so you would credit trade receivables, right? So this is also very important. So they're called debit nature because anything, if you need to record an increase, then you always debit to this. Now, if you flip the coin, then credit nature. What are credit nature items? They are liability and equity items. So capital is included in here as well. And income items. So income, be it sales revenues, service fee revenues, or other types of revenues like rental revenues or commission income. These are things that you see in your examination. These would be credit nature items. So if you want to record an increase, then you would credit this. If you want to record a decrease, you would debit this. I'll go through some examples, but to kind of crystallize or solidify your understanding of this. But in the meantime, make sure you take a picture of this table and have that memorized as well. Okay, so what are assets, liabilities, incomes, expense? This is a list. It's not an exhaustive list, but a list that you should feel comfortable walking into examinations to kind of say that, okay, I know what these are. All right, so go memorize them. Now, non-current assets are classified into current and non-current. Non-current assets are typically those that you can't liquidate in the next 12 months. They are actually purchased for long-term usage for the business. And current things that can be liquidated. And when I say liquidated, I mean converted to cash in the next 12 months. So for example, inventory, you can actually, if you're in the business of selling books, you can usually sell your books quite quickly, versus if you're in the business of selling books, then you want to sell your machinery that make the books, or your equipment that hold that process the books, or manufacture the books. If you're in the business of manufacturing books, it takes a bit longer, right? So this is a list, right? And expenses, they're, loosely speaking, there's a direct expense. So if you're a business of selling books, then cost of sales is actually the books that have moved from your inventory into your statement of financial performance, and called cost of sales. There are other types of expenses. They are indirect expenses, so they are not the cost of the books itself. It's the other things like rental, your people costs. It's called wages and salaries. The insurance on your, let's say your business, your building, or your premises, right? And the list goes on, so on and so forth. Okay, I wouldn't go to talk to you about everything about in this list, but if you have any question, you know where to reach me. POA for you is my at gmail.com is my email address, or you can reach me just via comment in this channel, and I would be sure to respond to that. Okay, now this one mentioned before, debit to increase the balance and credit to decrease, because they are debit nature. Credit nature items, liabilities and income, and also equities. I don't have equities listed here in this table, but equity items would be essentially your capital. non-liabilities are split into current and non-current, and here you have it. And income is split into revenues type of income, so the things that you generate on a monthly basis that you sell because of sales, because of things that services that you provide, or other types of income which could be more ad hoc, right? Or it could be more regular, but it's not the core business activity. Okay, and this is credit nature, so credit to increase, debit to decrease. Now let's go to some practice, right? And that's the interesting, exciting part. You receive payment of 1,000 from a credit customer through check. So I've mentioned, when you look at a transaction, you got to have two questions in your mind to figure out the journal entry. What are they? What is happening and how it's happening, right? What and how. Okay, so in this case, let's see what's happening. You've actually received payment from a credit customer. And how did that happen? You received it through check, right? So two things in my mind, right? Credit customer, I would think about trade receivables. So, and check, I would think about cash at bank. Now, which would go up and down as a result of this? So when I receive payment when I receive payment, then my bank account actually goes up. Bank is debit in nature, and so if it goes up, then I should debit bank, cash at bank. And if the customer pays me money, then their balance with me, their trade receivables with me actually goes down. So that's trade receivables is a asset, and if it's going down, then it's going to be credit trade receivables. So this is my journal entry. Okay, next, paid utilities, 150 in cash. Utilities, what's happening? I paid utilities. How am I doing it? In cash. So utilities is one account that I'm thinking about, and cash at bank, cash in hand is the other account, right? So utilities, what is it? It's asset, liability, expense, income. It's an expense, right? It happens every month. So I would assets, expenses are debit in nature, so I would debit the utilities because I paid additional utilities, right, for this. So utility balance should go up. And I paid it through cash. So when I pay it through cash, my cash balance actually goes down. So I would debit utilities expense and credit cash in hand. Cash in hand is an asset, and to reflect on an asset going down, I have to credit this. Next, business owner Emma paid $500 for cleaning for her home from the business bank account. So what's happening here? So Emma, who's the business owner, got the business bank account to pay for her personal home cleaning. So I don't know whether you heard of this account called Drawings, right? But Drawings is like a contra capital equity account. So it reduces your capital or equity amount from an owner's equity point of view. Okay, because she actually used the business funds to pay for her personal stuff. So this is kind of not the business related item. So this is typically known as drawings. And drawings is, if it's contra equity, then it's opposite from equity, then it's debit in nature. Okay, that's something that I don't think was in the table in an earlier slide. So you just got to remember that drawings is debit in nature, and it's always opposite of equity. Equity is credit in nature, so drawings has to be debit in nature. So there's additional drawings in this transaction here. So I would have debited drawings 500 and credited cash at bank because the bank account actually goes down from the business point of view. Lastly, depreciation for motor vehicle, 500 for the year. Now this is a standard journal entry. You will see that in paper 2 question 1 of all your examinations. For sure this journal entry would come out, right? And you just got to remember that depreciation expense, sometimes you just call it depreciation motor vehicle and not depreciation expense, but it's an expense. Okay, and then you credit to accumulated depreciation, and this accumulated depreciation is a contra asset. So it's something that's minus off from your asset balance to get your net book value. Okay, so that's credit in nature because it's contra asset, assets debit in nature. Okay, so hope this page would help. Let's see what's in the next slide. So in this slide, we have some transactions from exams, and these are from paper 2 question 1 exams. Now you need to figure out here what is the journal entries that will come about as a result of reading these statements or activities or transactions. Okay, number 1, new equipment 4,000 has been posted in error to selling expense. So what's happening here? There was an error made and you need to correct that error. And well, how is the error made? Instead of posting it to new equipment, there was a posting to selling expense instead. All right, so do you want to bring down selling expense? Yes, because too much has been posted to it. And do you want to bring up equipment? Yes, because equipment cost, I think $4,000 was never correctly posted to new equipment account, right? So equipment is an asset account. If you want to bring it up, then an asset is debit nature, so you debit equipment. Selling expense is an expenses, right? And if you want to bring it down, it's debit in nature, you credit selling expense. So that's how you figure out the journal entry for this. Now, the next one, general expenses 350 were prepaid. So if you have general expenses that were prepaid, what do you hear? You know what's happening, right? There was a prepayment of general expenses for $350. So you need to debit prepaid general expense, because what you are listening is you have to recognize higher prepayments because there was just this new $350 that were prepaid for general expenses. The prepaid anything is debit in nature, so you would have to debit prepaid general expenses to recognize this transaction. And what you want to bring down is general expenses, because within general expenses itself, which is a debit nature item, there were actually too much registered in there. You actually paid too much. So whatever that's reflected in your general expenses, you want to bring it down. So that's why you credit general expenses as well to decrease the balance there. Next, wages and salary 560 were owing, right? And in here, you will have to recognize wages and salaries because that's what's happening. And you haven't paid them, so you have to recognize a liability to register that you are owing wages and salaries. So a liability is credit in nature, and liabilities, if you want to recognize more liabilities, you want the balance to go up, so you credit wages and salaries payables or accrued salaries under syllabus 7175. And you debit wages and salaries expenses because wages and salaries is an expense. And if you want to register this additional item, then you have to debit it because it's debit in nature. Okay. Now, included in service fee revenues was an amount 1,800 received in advance. Now, service fee revenue, what is that? It's credit in nature item. It's an income, right? And now, is service fee revenue too much or too little now if it's received in advance? So if it's received in advance, it means that in this current financial period, people have paid you a lot more today in this financial period, and that's for really the future financial periods. So you want to reduce the service fees for this financial period, and to reduce service fee revenue, you debit it because it's credit in nature. And what do you credit? Now, service fee revenue received in advance is actually a liability account because that's income received in advance, right? So service fee revenue received in advance is a liability account. If you want to recognize an increase in liability as a result of this transaction, then you credit it. So this is your double entry or your journal entry. Now, so whatever I have shared with you in those examples are some of the journal entries that you need to know and are commonly seen in especially paper 2 question 1 questions, but the journal entries, having a good grasp of it will help you throughout the entire journey of learning principles of accounts. But these are the ones that prepaid expenses we went through, expenses owing, went through depreciation, we went through in the earlier slide as well. Income received in advance, we just went through that. Now, this other one, movement and allowance for impairment loss on trade receivables, I haven't touched on this in this presentation, but I have talked about it in my paper 2 question 1 working solution. So go take a look at it. If you still have questions, let me know. Okay, so that's all for today. My email address is poa4u@gmail.com, or you can definitely reach me via my channel or this channel. Hope this has been helpful for you, and take care for now.